It's no secret that for many, buying a home can be a stressful process. Most don't know that your choice of agent and lender play a big role in that. In this video, we're going to talk about 28 tips to buy a home with confidence and get your offer accepted. Number 1, analyze if buying a home is the right step for you right now. Do some research online and talk to your favorite real estate professional to understand the obligations and benefits of home ownership. While owning a home is always a great investment, no two situations are exactly the same. How will buying a home affect your lifestyle? How long do you plan to stay in the same place? These and other questions posed by your agent will help you analyze the pros and cons of renting versus buying in your specific situation. Number 2, determine your goals for buying a home. What is important to you? Not having to worry about dealing with a landlord? Being able to do what you want with your home? Stability in a community? Where do you want to live? How far is it from work? What schools are associated with that area? How long would you be planning to own this property? Do you want a pool, a big backyard, 3-car garage, mother-in-law quarters? The more detail you can get into regarding your wants and needs, the easier your home search is going to be. Number 3, attend a home buying seminar. Learn the steps to buying a home from the lending process to the closing table directly from a local real estate expert and a local lender. This is especially true for first-time buyers, but taking the time to become a more informed home buyer never hurts anyone. After all, the technologies and the contracts are constantly changing. Even I have to dedicate a certain amount of time to keeping up with everything. Each month, my lending partner and I hold a virtual webinar for prospective home buyers to answer the most common questions that new buyers bring us. Number 4, understand how home ownership affects your taxes. Meet with a tax accountant or financial planner to determine exactly how your income tax obligations will be impacted if you become a homeowner and take on a mortgage loan. I don't want to cross my professional boundaries here, but I will say that in most cases, the tax benefits of owning real estate are very good. Number 5, get your credit score in shape. Be mindful of the basics, of course. Establish good credit behavior. Pay your bills on time, at least the minimum amount due on every credit card or credit obligation you have each month. Don't max out credit limits on your credit cards. Avoid making large purchases on credit prior to buying a home, including RVs, cars, trucks, boats, airplanes, or furniture. I've had a buyer trade in 2 vehicles and buy one, lowering their overall monthly payment significantly, and they still had to cancel their escrow because they no longer qualified for the loan. This is why it's so critical to connect with a local lender as soon as you get started in the home buying process. If you have any questions or doubts regarding your credit or loan qualification, you have that expert in your corner. Now, I work with Corey Reeder out of Exeter. He's fantastic with new home buyers. He's great at explaining the different loan programs available to you. If you're interested in talking to somebody about getting qualified for a loan, reach out to me and I'll connect you with Corey. Number 6, get organized. You will need to provide various documents to the lender in order to get pre-approved, including 2 previous years of federal tax returns and W-2s, paycheck stubs for the last 30 days, proof of ongoing income such as pension, Social Security, etc., and 2 years of your most recent bank statements or brokerage statements. Of course, your loan officer will let you know what other information he or she needs. Connect with them early in the process and have all of this done before you find a home you like. In this market, they don't last long, and you want to be ready to shoot your shot if you find the one. Number 7, money for down payment. Do you have a plan for saving up your down payment? Will you be borrowing money from your 401k or another retirement account? Definitely research and understand the impact of borrowing from your retirement account. Are you receiving a gift from your parents or another relative? This is quite common, but there are a lot of guidelines around it, such as ensuring that all funds are seasoned. You need to talk to your lender in depth about your situation to determine the best route. Number 8, get pre-approved. Find out how much loan you can afford before you start looking at homes. Meet with a loan officer to review your specific situation and obtain a pre-approval to purchase a home. Your lender will review which loan programs are available to you, what the down payment and monthly payment will look like in each scenario, and will help determine the best path for you. Once you determine the amount of your down payment and the amount of the loan for which you're approved, you will have a good idea of your price range and can more efficiently begin looking for a home. Rather than relying on internet generalities, talk to a local real estate professional about the real estate market in your area. Real estate varies from state to state and in many aspects from market to market. Market conditions are constantly changing and are neighborhood specific. There truly is no substitute for a local expert. Don't be afraid to interview a few agents. I know everyone has a cousin and a brother-in-law and 3 friends with a real estate license, but I promise you, real estate is not an industry where it doesn't matter who you use, and the gap between the great agents and the masses of average ones grows every day. Number 10, low down payment loans. Despite what many folks believe, you don't need a 20% down payment to purchase a home that you're going to live in. Depending on your loan program, you might even be able to get in for $0 down, but that doesn't mean you won't need any cash to close. You can still expect around 2% closing costs at very least. Depending on your situation, it might make sense to wait and save the entire 20% down payment. If you have less than 20%, many loan programs require you to pay for mortgage insurance, which can increase your monthly payment by hundreds of dollars. This is why it's so important to speak with a mortgage professional early in the process. Number 11, know the different types of loans. When you meet with your lender, he or she will ask you a lot of questions and will likely want you to dig up some old documents and bring them as well. It can feel intrusive, but rest assured, the intent is good. The more the lender can understand your situation, the better they're able to advise you initially and ensure there are no surprises later on in escrow. By going into your situation in depth from the beginning of the process, you will understand the advantages and disadvantages of different loan programs, what works for you, your financial situation, and your risk tolerance. Talk with your lender early in the process and be sure they are aware of everything that might affect your credit, employment, or loan eligibility. Number 12, understand how a loan is priced. The interest rate is not the only cost of a mortgage loan. There are also points and fees. These costs are paid upfront as part of your closing costs. Fees vary from lender to lender, so it's critical to actually sit down with your lender and understand what you're paying. While you're at it, ask your lender how much they charge in fees. Does your loan pricing include points? A point is 1% of the loan amount. Since points are prepaid interest, if you pay for points, you should pay a lower interest rate on your loan. Number 13, mortgage insurance. Is this the right strategy for you? If you don't have a 20% down payment, many loans will require you to pay for mortgage insurance, which can add hundreds of dollars to your monthly down payment. So it's an important aspect to consider. Talk to your lender about your options to determine if it makes sense for you to secure a loan with mortgage insurance, get a piggyback loan, or wait until you've saved a larger down payment. There are plenty of options available, such as lender-paid mortgage insurance, essentially paying a certain percentage up front in lieu of mortgage insurance. Now, there are other options available, such as lender-paid mortgage insurance, where you essentially pay a certain percentage up front in lieu of mortgage insurance. In many cases, mortgage insurance is nothing to fear though, since you can always refinance the loan with more favorable terms once you have 20% equity in the property. Number 14, don't make any new purchases or open new credit cards. I'm sure you've heard how important it is not to make major purchases prior to buying a home. Opening new lines of credit while in the home buying process will also affect your credit score. It may also impact your debt level, which will affect how much loan you can qualify for. One of the reasons that it's so important to connect with a great lender early is having someone to answer questions like these. For example, I had clients in the middle of a home purchase who decided to sell 2 cars to purchase one, lowering their overall monthly payment. Now, one would think this would be a good thing. However, the new account from the purchase was a red flag, which ended up disqualifying the buyer. When in doubt, ask. Number 15, work with a real estate agent. With so much access to property listings on the internet, it's tempting to think that a buyer doesn't need an agent. Not so. In a competitive market with multiple offers, having the expertise and advice of a real estate agent can be highly beneficial. Some buyers think working directly with the listing agent will give them the advantage. And while it's true, it may increase your chances of getting that particular home, the listing agent has a fiduciary responsibility to the seller and is legally obligated to look out for their interests. Getting your offer accepted is only the first step in a long line of negotiations, so be sure that you have someone in your corner to help you out with that. Now, getting your offer accepted is only the first step in a long line of negotiations, so be sure that you have someone in your corner. Your agent should be familiar with the market that you're interested in, help you find a house that meets your needs, recommend how much to offer on that home, negotiate the price in terms of the transaction, and stay involved throughout the term of your escrow, helping you release contingencies and deal with any challenges that arise during the escrow period. A great agent creates a smooth, stress-free process for their clients. Number 16, needs and wish list. Make a list of what you want in a home, needs, wants, and dreams. You may have to compromise on some of the wishes, but it's important to consider everything and share your criteria with your agent. When talking with clients, I recommend looking for the things that you cannot change and making sure you get those. Making sure you have the proper space for your family, a layout you enjoy, the proper lot size and location are all things that you really can't change later, so definitely determine your needs here. You can always paint walls, install flooring, or remodel later, and you'll end up increasing the value of your home as you do. But if you end up sacrificing in the areas you can't change, you'll find yourself moving again sooner than later. Number 17, the home comparison worksheet. We created a home comparison grid to help our buyers evaluate potential homes as we go through the showing process. When you go through a dozen showings a day, it can be challenging to keep them all straight. So my advice, you should create a home comparison worksheet too. I recommend balancing your wish list with your budget constraints. You don't want your assessment worksheet to be too complicated, but be sure to include everything that's important to you. Take a photo of the homes that you like and label them with the address so the homes don't all blur together. Happy hunting. Number 18, know the market. Take the time to research the market so you feel confident that you're making a wise decision on your home purchase. This is where your agent's influence is critical because they play in this sandbox every day. If you're early in the process, keep an eye on my real estate page. We review the market conditions every month and discuss the trends both month to month and year over year. The last couple of years have been pretty abnormal, so it has never been more important to keep your finger on the pulse of the market. Number 19, explore the neighborhood at all different times. We usually show homes during the day, so one thing many buyers don't consider is what the neighborhood is like during other times. Check out the street and the neighborhood at different times during the day and on weekdays and on weekends. What seems like a quiet neighborhood during the day might be quite different at night. Or there may be plenty of parking on the street during the weekend, but the weekdays might be a different story. Before you make an offer, and even over the first week or so after acceptance, make several trips to the home and check out the surroundings. Number 20, lead with your head and then your heart. You want to fall in love with the house you're going to buy, but don't let that love blind you to aspects of the home that might not be suitable for you and your family. It's not only important to document your wants and needs, but you also need to be thoughtful about which items are wants and which are truly needs. You're unlikely to check off every box on your list, so prioritizing can be helpful. Be realistic with what you can afford. This is a big investment, and you want to be thinking with your head before reacting with your heart. Be sure you know the sale price, the cost to close, and how much your monthly payment will be. Number 21, understand your commute. Before you make an offer on a home, drive to work from the house at your usual commute time to determine what your realistic commute time would be. Make sure you do this during the time you expect to make the drive, since traffic varies greatly depending on the time of day. While you're at it, you may want to drive to a few of your other most common locations, such as the gym, your church, the local grocery store, or the nearest Starbucks. Number 22, research the schools. Even if you don't have children who are school age, the quality of the schools in the area will likely have an impact on the future marketability and value of your home. School district lines are changing all the time, so this is another area where you should consult your realtor and have them confirm the assigned schools in your neighborhood. This is even one of the top priorities for investors when looking at properties to purchase. Rental prices are much higher in areas with top-performing schools. This is one of the top priorities for investors when looking for properties to purchase, since rental prices are much higher in areas with top-performing schools. Number 23, what's around the home? Everyone loves not being super close to their neighbors, and it's even an added benefit when you have an empty lot next door or behind you, but it's critical to understand the zoning in and around your neighborhood. That open space that you love next to your home may be a new residential or commercial development in the near future. Whatever goes there, you will deal with the result both while you live there and when you go to resell your home, so it's important to know your zoning. Number 24, the home inspection contingency. It is the buyer's option to order a home inspection, but it's an important part of your transaction and a great agent will always recommend it, even if you're handy and feel confident that you know what you're looking for. Beyond being able to discover issues that are otherwise unseen, there is a transfer of liability when a licensed inspection has taken place. A home inspector evaluates the structural, mechanical, and electrical condition of the property that you're purchasing. This report can help you negotiate repairs, get an adjustment to the purchase price if necessary, or enable you to get out of the purchase agreement altogether if the report reveals too many physical problems with the home. Number 25, select an escrow company. Once your offer has been accepted and you sign a purchase agreement, escrow is opened. An escrow company is a neutral third party that works with the buyer, seller, agents, loan officers, and other parties to your transaction to coordinate the obligations and paperwork necessary for closing. While it isn't super critical which escrow company you use, it's a good idea to use whoever your real estate agent is most comfortable working with. That working relationship will be critical should issues arise during the escrow process. Number 26, understanding title insurance. A title insurance company conducts a title search to make sure that the property is free of any legal claims against it. You will need to buy a title insurance policy that insures your lender for any loss caused by discrepancy in title to the property. In addition, the owner's title policy protects the buyer from title defects. In our market, the seller typically purchases the title insurance, so this likely won't be a cost that you assume, but you do want to be sure that these terms are covered in your purchase agreement. Number 27, obtain the proper homeowner's insurance. Homeowner's insurance is not only a good idea, but it's also required by the lender. Homeowner's insurance protects you and the lender in the event of destruction, damage, theft, and liability. Your lender will usually obtain some quotes for you or line you up with a great insurance agent, but if not, talk with your realtor. Costs can vary from company to company, so it's worth your time to get quotes. This is a cost that you will need to consider for the duration of your home loan for sure, and likely the duration of your ownership of the property. Number 28, keep an eye on interest rates and market values. After you purchase your home, if you have private mortgage insurance, make sure to petition to eliminate the mortgage insurance once your loan-to-value ratio is at 80%. Ask your lender the requirements for eliminating mortgage insurance. If you have an adjustable rate mortgage that you are seeking to refinance, keep an eye on interest rates to determine if refinancing is the right option for you. Now, this is especially relevant in 2022. After 2 years of insane property value increases, homeowners have likely grown out of their homeowners insurance already if they purchased in 2020 or before. If that's you, talk with your preferred lender as soon as possible to see what your refinancing options are. Thank you so much for tuning in to our buyer tips, and until next time, we'll see you soon.